Everyone, my name is Brian and welcome to Copycat Trading. Today is Friday, February the 9th, 2024, and this is a daily market brief video. And we could probably call this a weekly market video. Have not been here in a while, been a little bit sick and under the weather, finally feeling completely up to it, but also been on a business trip, so I haven't been able to make the video. But just wanted to put one out for this is the end of the week and just update you on where the market is. It also helps me to stay calibrated to the market, so you can join me in my copycat trading and kind of see what I'm doing. Doesn't cost you anything, of course, and just take a look take a look at the markets with me. All right, the first thing I have up today for us is the SPY chart. Spiders, of course, it's the S&P 500 ETF, and I've got some strange markings on here. These are price ranges, and the only reason why we use these in technical analysis is to kind of measure what the moves are in the market, and these are called measured moves. The market loves to repeat itself, and so therefore I have these measured moves on the market. So you can see here's the COVID lows way back here in March of 2020, and this is where we were at the very bottom, and we made a 44.62% move up before we pulled back into the 50 moving average. That was an unusual move, so we're really not going to take this one into account, and you can see all the volume that was associated with it. But all the rest of the measured moves in the up position, not all of them, but many of them, they come up and they hit 22.19%. Some of them $71. But if you look at 22% here, 22.19%, all the way from the low past the 50 MA to the high. And this is from major lows or major pivots to major high, major pivots. And so you got 22%, 22%. There's 19% here. There's 20% right here on this one. This is a small one that I was measuring from the, not sure why I was measuring that one. We'll take that one out. So 20% right there, and then 22% is where we're currently sitting at right now. So we're sitting at 22% on the expansion from this major pivot bottom to this major pivot top here. It's made even more pronounced on the weekly chart, and that's actually where I drew these from. And so you can see here's a major pivot bottom on the weekly, major pivot top on the weekly, pivot bottom from the 20 MA, from that pullback there all the way to the top here. So I was trying to figure out if the market is making a measured move, exactly how far could it go? Well, it could go as far as 44.62%. I doubt that very seriously because there's not something major going on in the news cycle. There's no black swan event that we're seeing. So I would say that the major pivot top is probably going to be these normal moves in here, or somewhat normal moves. This is a bear market, and of course this is probably a part of a bear market rally. So we're probably talking 22.2%. We're probably at a top right now, and you can see how extended the market is based upon what the daily chart is showing, and the weekly chart and the monthly chart. Every major time index that we look at, it doesn't matter what time index we're looking at, the markets are severely overbought. So we should be getting a pullback just any day. Now, I told you before that the markets, whenever they're going on the upside, act like a stone being thrown up in the air. A stone usually finds a bottom. You can draw a line in here at the bottoms where these bottoms are at. If we just start here and draw the line through that bottom there, somewhere in there, you've got a floor. And the floor sticks to the bottom fairly easy. So if a rock gets thrown up in the air, it comes back down and it hits the bottom. Now, obviously it pierced a little bit here, and that's okay. It gets thrown up in the air and it hits the bottom. But when you're talking about the tops can vary. And they're like the stone being thrown up in the air. It just depends on how hard they're thrown. Look at that. So if we draw the top to this point here, and we continue on, and maybe we're trying to hit this top as well, we've got to hit as many tops as we can. If I draw through here, look at all those tops that I'm hitting, but look at how many times it pierces. It didn't quite make it here. It just about touched it right there. It didn't quite make it here. And then it went way through it there, went way through it there, went way up through it here, went way up through it here. And as you can see, we pierced the top and we're gone like a rocket into outer space here. So we're way overbought, and you never can really pick the tops. The tops, trying to pick a top is like a fool's errand. It's something that you can get in a general area, but if you wind up going full in on a top, then it can run away with you. That's the reason why a lot of traders will not even do a short in a market. But we're at a place now, if we're looking at measured moves, you're at a place now where you should see some sort of pullback. And when we say pullback, it should be a pretty good significant pullback. You can see the pullback here. You can see the pullback here. Of course, this is a part of the bear market, so it's not really a good count, but maybe you can pull back maybe 35% of the way. So if we're looking at this move here, you should get a pullback to at least the 20 moving average here in the next week or so. I'm not going to make a prediction. I'm just saying the statistical probabilities based upon what measured moves, if they look like the same in the regular market, based upon those measured moves, it should be pulling back here soon. Nevertheless, the stock market today held up fairly well, and it didn't just hold up, it actually went up 0.58%. You can see all these gaps that are going on in the markets. You had a gap up as of Wednesday last week or Tuesday last week. You went up to Wednesday, another gap here, and then it comes up, and there's a small gap this morning, and the market just keeps on going up. So we've got a significant rally on our hands of overexuberance and euphoria in the markets. And usually when that happens, when too many people get on one side of the boat, you have a significant pullback. And it would just take a small ripple of rumors to get a real good cascade going. And the volume today was only 63.5 million, so that's very light volume in the markets. The last heavy volume sell-off we had was on January the 31st, and we thought that was going to start a good pullback, but it didn't. It never even reached the 20 MA, and it just went right back up the next day. So we're making all-time highs on a daily basis, and key metric that we have hit, of course, on the S&P 500, not the S&P 500 ETF, but on the S&P 500, we've hit the 5,000 mark, and today we closed above the 500 mark. That is going to psychologically get a lot of people on board that have been sitting on the sidelines waiting for the market to pull back. I thought the market would pull back long before this. And so I freely admit that I was completely wrong in that regard. I was looking at places like this. And so I was looking here. And I was looking at things like this. I was looking at, marks like this, trying to figure out whether we would pull back into this area. I was thinking that we'd get a pullback at some point in this area. I was looking at parallel channels, and if we draw a parallel channel in there and say, okay, we're going from this point here, and we're going to this point in here, and then we draw a parallel channel up here, I was thinking we get a pullback in this range, up in here. Whenever we had a pullback, we had this minor pullback, and I thought, okay, that's where it started. All these points around here, I've been thinking we were going to get pullback. So I can freely admit I have been totally wrong in that, but that's the way rallies are. Rallies fool a lot of people. They go up further than what you think, especially when you're in uncharted territory of the all-time highs. Here's the all-time highs, and you get that adjusted a little bit better. There's the all-time highs, and we have been in all-time highs just trucking along and moving up this whole time. So nobody is going to be able to predict this. Anybody who says they can, they're running a fool's errand. Whenever you take a look at it, you could go up to a 1.618 way up in here if we're talking about how far up we could go, but there's just no telling. At this point, we're looking at measured moves, and we're saying, okay, this is where our next statistical probability is. And that's all it is, statistical probability. The rock was thrown up 44.62% right here off of the COVID lows. We're probably not going to get that because this is not an unusual situation. It was thrown up 22% here, 22% here, 19% here, 20% here, and now we're over 22.2%. So as far as measured moves goes, the rock has been thrown up higher than what it has in previous times, or some of the highest that it's been thrown up in previous times. So we are overdue, but we were overdue back here for a major pullback or for some sort of pullback. And even when we were here, we came into the 20 MA, but this is not even a regular correction. A regular correction for the market should be somewhere around 30%. And so we're still looking for a good pullback, but just keep that in mind. I have been slowly taking profits. I've still got a few longs that are on, but I've been slowly taking profits on everything because I'm expecting something, and I'll just sit on the sidelines as far as the shorts go. I'm not going to mess with the shorts as of right now. If I do any kind of short, it will be a quick stop. So in other words, I'll go into a short with a small position, and I will look for maybe a 5% move up for a full stop out for that particular short. But that's all I'll do, because wherever the next move down is, whenever the next move down comes, it will likely be a large move. All right, so that was the SPY. SPY was up 0.58%, $2.88. It's at 501.20, so it officially closed above the 500 mark. As far as the QQQ goes, I drew this parallel channel in here. in here just to show you statistical probabilities of how we're at the top of this channel. We've hit it here, the bottom of it here, we hit it right there, we pierced it right there, and now we're at the top after all these. You notice these bottoms here match up with this top here. So we're getting close to reaching the top of the QQQ, and this is the measured move on the QQQ. You have a 26% move up here, you have a 21% here, a 16% there, a 36% there, and now we're at 30%. So you could continue on, but if we're talking not dollars here, the last measured move was $102.79. I made this measured move in dollars instead of percentage of $102.79. Spiders, I did not do it that way. All right, so that's where we're at. And of course, on every metric, whether we look at weekly, we look at monthly, we look at daily, whatever the case may be, the SPY and the QQQ are both way overbought and are overdue for a pullback. A pullback that looks like this one. This one is a major pullback, almost to the 50 MA on the weekly. And so you can see that's what a normal pullback looks like in the market. Whether we do a normal pullback or whether we do a much bigger pullback, not sure. We'll see what the market says. Now, no matter what we do, if we do a pullback, whenever we get that pullback, we are probably going to pull back to the highs and be our first stopping point. There is the, to the all-time highs that were made back here in 2021. That's going to be your first stopping point. SPY, exact same thing. So if we look at the SPY, our first stopping point is going to be the all-time highs. Whenever I say stopping point, I mean our first major stopping point. Then you've got several other stopping points along the way, but for now, we've got this stopping point as on technical basis for our next major pullback. And that would be about a 20 to 25% pullback right there. A 35% pullback would be like right in here. And then if we had a 50 or 60% pullback, we'd be looking at these pivot highs right in here. So we'll just have to wait and see what the market holds. And then as far as the IWM goes, the IWM actually broke out of a wedge pattern, a longer term wedge pattern that I've been watching. You got this wedge pattern that was coming together here. And the reason why I've got it drawn out down here is because it usually comes back and back tests. You can see it better on the weekly. But it usually comes back and back tests the line, and I've got a good back test candle right here. And then it has sprungboard off of this and made a breakout move. So this is a breakout of a move of a wedge pattern that has been forming over many months in the Russell. And that makes sense as things begin to rotate out of some of the Magnificent Seven. They're going to rotate into stocks that have been beaten down as portfolios have to be rebalanced. They're going to rebalance out of the Magnificent Seven, and they're going to pull money out of those stocks, and they're going to rotate them in and rebalance into stocks in the Russell 2000. So here, this Russell 2000 has also been creating this bull flag or semi-bull flag off of this nice move up here. So this bull flag, for those of you who don't know, that is a up move followed by a sideways move or a 45 degree, or not as much as a 45 degrees down. So this is the flag here. That's the flag pole. And then this is the flag. The blue area is the flag. So it's created this flag. And when you see a move coming down this way and a down move at about a 30 to 35 degree angle, and when you see that move coming off that way, that is a bullish pattern. In other words, it's a pattern that is signaling further upside. And today we broke through that pattern. So we broke out of that pattern, out of that wedge, making its way up. So the first stopping pattern point would be right in here, 205. If I was going to play this, and I actually am long, but I'm long down in here somewhere. If I was actually going to play this here, then what I would do is I would wait for a pullback to this line right here, or I'd at least look for a pullback about 50%. I'd go long, and then I'd set my stop out limit below this line right in here. All right, so that is the IWM. On gold, it was fairly flat. We were up, we were down 0.47% or $9.54, and we have broken out of this pattern here. And you can see what gold did. Gold came back and revisited this wedge pattern, or excuse me, this flag, and it came up. And we're just waiting for it to consolidate. Right now, it's just consolidating. And I can remind you that we are in a bigger pattern of a semi head and shoulder, inverse head and shoulders pattern. A true inverse head and shoulders pattern actually has the line down sloping, or the neckline would be down sloping. This one has it up sloping. So it is not a true inverse head and shoulders. I know a lot of people are talking about the inverse head and shoulders, but this one is not a true inverse head and shoulders because the line is up sloping. It should be down sloping. And the exact opposite is true for a head and shoulders pattern, which we'll see here on silver. All right, so there's silver, and silver is up by 0.19% or 43 cents today, 22.60. And you can see that it has a regular head and shoulders pattern with the neckline right here. So there is the left shoulder right there, and there is the head, and there is the right shoulder, and it broke over here, and whenever it broke down, it came back and revisited, never closed above it, and has been chopping around here. It could go down to this 1946 level, somewhere in there, and if it gets down there, that'd be a really good buying opportunity, probably somewhere between the 19 and the 1950 level. Be a good buying opportunity. But as of right now, it is just chopping around in this area, and we don't know whether that's bullish or bearish consolidation. Up, if it go off of this, it's bullish consolidation. If we go off of the down mood, it's bearish consolidation. We just don't know at this point. It's hard to read on the silver chart. Natural gas continues to go down, and you can see that natural gas made a somewhat of a bottoming tail today, but not a full bottoming tail. So natural gas has got a little bit further down. It could go. I was following somebody today that was saying that it was making a semi-wedge pattern, and you can take a look here. If we were to draw this out, I guess you could call that somewhat of a wedge pattern, but I am not too convinced of that being a wedge pattern. I think natural gas is a very difficult chart to read, and so you could draw it like this. So that would be a semi-wedge pattern that's being formed there. Downward sloping wedge pattern generally breaks to the upside. And so you're almost to the end of that wedge. We'll see what happens. I'm still long right around in here. So I'm not very far behind. Or not very far in under at all, and I may add to my play if it gets down just a little bit further. But you still got these lows in here. If I bring up the weekly chart, you can take a look. You still got some lows down here around the COVID time, June 2020, that we could go down and test. And so that would be the pretty significant lows in the natural gas chart. All right, so if we go back to the daily on the natural gas chart, this is a good place. It just bounced right off that trend line, so it's a good place if somebody wants to enter. It's a good place to enter. Here is U.S. oil, and by the way, I'm playing natural gas on the UNG, not in natural gas futures. Here's U.S. oil, and this U.S. oil chart, we drew this wedge pattern many weeks ago. We've been talking a lot about it. It broke out of that wedge pattern here, and then it came back in, hit this upsloping trend line, and bounced right back up, and we are at $76 a barrel right now. So it was up just 0.1% today, not a very big move, but if it continues up and it takes out these highs, we could make a move back up to around the 82, 83 level, and then ultimately up here to the $90 level if oil gets above these levels. And we'll just have to wait and see. That's all going to be dependent on what happens really in the Middle East. Bitcoin had a big pop today, and Bitcoin is revisiting these 47,000, 48,000 level, and around the 50,000 level. It's going to be running into the 618 retrace that has happened from this all-time high all the way down to this low down here of around 15,000. And so it'll revisit that again. I would imagine it will get rejected off of the 48 to 50,000 again. So if it comes up into this level, I'll probably be buying BITI, depending on how it gets up in there, and playing a short on Bitcoin. BITI is an inverse ETF. And so it'll probably come back down, or it'll probably hit up there and it'll come back down. And if it goes back up again, then you could have a breakout on your hands. But right now it went to the 618 retrace and immediately got rejected off of that. We saw that big, humongous topping tail back in January. And then now it has pierced down here and it has come back up to this resistance level and then the 618. It will probably likely test the 618 one more this time. And then the third time it tests that 618 is probably going to break out. But this is the Bitcoin chart, and that's the way it looks like. And then, of course, you've got your support levels and you've got your resistance levels somewhere up here in the 50,000 mark. And it'll probably pierce the 618 this time if it does. And then I'll be buying BITI for a play, probably back down into the 44, 45,000. As far as the semiconductors go, semiconductors are still on a tear, and I left the upsloping trend line that I drew several weeks ago in there. It kind of hit, pierced it, and came back in, and then it just thrust right through again. I got another level right up in here, but that doesn't mean the semis have to stop there. Right now, they're insane, and of course, that all has to do with the way the markets move. We saw it in the .com era. We saw it in the early 2007, 2008, we saw it again, 2018. Now we're seeing it again with several other things. You just see it with all kinds of stuff. It doesn't matter. At one time it was 3D printers. At one time it was .com. At one time it was rose petals, or lilies. I mean, it was just all kinds of stuff. Tulips. It was all kinds of things. People get into these over exuberant areas on something and think they're the best thing since sliced bread. And when you see that, you can bet that the top is coming. You just don't know where it's going to be at. So the semiconductors, all of them are on a tear, and the SMH is just flying up every single day. It's just over exuberant. All right, so go back to NVIDIA. NVIDIA, as I said, people were thinking that it was going to stop at 700. It had a minor pullback, and then it just raced right up through it. And so we don't know where NVIDIA is going to go. I'm not going to short it. Certainly not going to short any of the semis right now, as long as the attitude is what it is. But there'll come a day when they will come back. Apple, 0.28% up, 53 cents. Not a very big move. Apple is just chopping in this range right here, trying to find its footing, trying to find itself after it had that big old thrust up back on February the 5th. Tesla found a bottom after it hit a 618 retrace off of this low here. Found that 618 retrace. I actually added to my position of the 618, and I'm sitting right around in here. Now, Apple or Tesla will probably take a pause right here at about 198.15 and will either pull back and then go up, or will consolidate below this level. And then it may move up to this gap. That's what I'm hoping for, is it moves up to this gap. And but it's probably going to take a pause right here at the 198.15 before it continues its move up. Microsoft again is on a tear, and it is overbought as well. It's extended and it's overbought, but it had excellent earnings, and so we'll just see how long the Microsoft run happens. We're just going to sit back and wait. Meta, same exact thing. Meta is in this consolidation inside bar pattern, and so it could go up even further, or it might pull back. If it has a normal pullback, look for it to go into the 20 MA. If it doesn't, it's just going to keep on moving up again with euphoria. Netflix, same thing, inside bar pattern. It could move up, could break out. If you're going to play this, I would probably go long, and then I'd set my stop below this level right here, or maybe even if you want a tighter stop below in here. You definitely don't want to lose too much. Whenever this thing does roll over, I'm talking about all these stocks, when they roll over, they're going to roll over very hard and fast. Google, nothing wrong with this chart. This is actually probably the strongest looking chart of the ones we've seen so far. It is not overextended. It is just now coming up above its 20 MA. The next stopping place for Google is this gap. If we were to come down, you've got all the support right down here on the 141, 142 on the daily. If we're looking at the weekly, Google is just doing an inside bar consolidation pattern. It is looking good. It just recently bounced off the 20 MA. It is looking for its all-time highs, and as you can see, it had an all-time high breakout up here, and it could easily hit its all-time high breakouts. Of course, that is going to be contingent upon what the market itself does. And then lastly, we got Amazon. And if we look at Amazon, Amazon is not as overbought as what Netflix, Meta, Microsoft is, but it is still overbought quite a bit. And it did not get a lot of consolidation around this area. And if I'm not mistaken, Amazon is not quite at its all-time high. So it's got a little ways to go before it hits its all-time highs, which are up here around 188, 189. So Amazon's a laggard, Google is a laggard. Both of those are the ones that I would choose to play if I were going to play them for further upside. All of the rest of these are significantly overbought. Not to say that they are not going to continue going up, but I certainly would not short them at this point in time. They may pull back, and I would miss that move. But as you have seen, all of the guesses that everybody has made on the S&P 500 and all of these stocks, all the guesses everybody has made on whether or not this rock is going to stop flying up have been wrong. They will pull back eventually and give us a buying opportunity. But as of right now, they are in the stratosphere and they are in orbit, however you want to say it. But the rock, I like to use the analogy of a rock, somebody throwing a rock up, because it just never quite goes to the same exact level. However, you can look at the measured moves and kind of get an idea of where you could count on it going. All right, that is all I'm going to brief you on today. Several other earnings coming out, and the earnings season's not over, so we still got quite a bit of volatility in the day trades. But as far as the swing trades go, with all this exuberance and this vertical move up here, I'm not ready to put on any new swing trades, at least in the S&P 500, the NASDAQ, or the Russell, and the Dow. I might go somewhere with the natural gas or gold or silver, and of course gold is kind of in a limbo. I'm not doing anything there. But some of the other markets I might do, but for right now, absolutely nothing. Other than that, China's stocks are beat down, so that might be an opportunity as well. All right, I hope everybody stays safe, and make sure that you stay safe in the markets and trades wisely. And I will see you guys in the next video. I hope you all have a great day and a great weekend. This is Copycat Trader signing off.